Hey YouTubers, how's it going? Mike Martins here, Mike Martins channel. Man, look at that. Crashing Canadian mortgage lender bailed out by 321,000 retired Ontario healthcare workers. The story is by Tyler Durden from Fight Club, and it's from Zero Hedge. I can't believe this. I can't believe this is happening. And this has no exposure. It only has 730 shares. Come on, people, get this story out there. All over the world, this story should be out there. This story was sent from me from someone from down under, and then I had this story sent to me not too long ago from someone from South Africa. So I said, I got to do this story. It looks like it's a big deal. With Canada's housing bubble, hold on, let it zoom in, popping amid the collapse of the country's largest mortgage lender, it was no surprise that the bailout had been orchestrated, and now we know the source of the $1.5 billion loan. 321,000 retired healthcare workers in Ontario. It's phenomenal. This is incredible. I can't even believe this is happening. As we noted yesterday, the stock of Home Capital Group cratered by over 60%, its biggest drop on record after company disclosed that it struck an emergency liquidity arrangement for Canadian $2 billion, $1.5 billion credit line to counter the evaporating deposits at terms that will leave the alternative mortgage lender unable to meet financial targets, and worse, may leave it insolvent in very short notice. This is horrible, people. This is, I mean, if, let's say, somebody, like, if I have problems with my small business, no one's going to bail me out. You know what I'm saying? Even though I'm paying payroll, even though I'm paying taxes to the government, even though I'm paying PST, GST, tax on my rent, even though I'm paying absorb, no one's going to bail me out. As a part of the inevitable outcome, one which presses the economy's eventual disintegration and likely liquidation, Bloomberg reported. There's the link there on that right there. And I'll leave this below for you guys. That the non-binding rescue loan with an unnamed counterparty will be secured by a portfolio of the mortgage loans originated by Home Trust. Sorry, guys. The screen is really small. I'm reading through my phone, so I want you guys to see the article. The Toronto-based firm said in a statement on Wednesday, Home Capital shares dropped 61%. They're making it seem like, yeah, I'm going to comb my hair today, and I'm going to take a shower, then I'm going to get married, and I'm going to go to bed. They're just bringing it out there like it's just something normal. In Toronto, to the lowest of 2003, dragging down other home lenders. Wow. And people should be on this and getting this out there. And we know the source. As Bloomberg reports, the Healthcare of Ontario Pension Plan, HOOOPP, is the lender behind the Home Capital Group $2 billion loan, $1.5 billion US, keeps doing that in US, to shore up liquidity, citing people's familiar with the matter. And there's a gentleman that makes videos and has been talking about pension plans being attacked. That's Mario DeCetis. He's got a channel on here on YouTube, and he has been talking about pensions being attacked, evaporated, and taken over. And he's been on this like stormtroopers into Poland. The Toronto-based pension plan is said to have given the struggling Canadian mortgage lender to shore up liquidity as it faces a run on deposits amid a probe by a provincial securities regulator. Home Capital has retained RBC Capital Markets and BMO Capital Markets to advise the strategic options after it secured a loan. According to a statement Thursday, Home Capital didn't identify the lender. Oh my God. HOOPP, which represents more than 321,000 healthcare workers in Ontario, was not immediately available to comment. But they're available to lend out $2 billion? Come on. HOOPP President and Chief Executive Officer Jim Kay sits on a Home Capital's board and is a shareholder. Home Capital's external spokesperson Boyd Ehrman declined to comment. God, maybe he's got nothing to say about this. This is nothing. He combed his hair and he got married and he went to bed. And nothing happened. I don't know. The one-year credit line has a 10% interest rate on the outstanding balances of 2.5%. Rate underdrawn amounts. The Toronto-based lender said that the finalized agreement follows an announcement early Wednesday when the Home Capital reached a non-binding agreement in principle with the institutional investor for the loan. So this is a long article here, and well, I actually read it. Okay, so here's a look here at a graph and showing you here what's going on. This is not good. Canada, the irrational exuberance, a piece of existing homes. Canada versus the U.S. This is crazy, guys. This is nuts. You see that 2008? You see the crash right there? Boom. Wow. It's incredible, people. Yeah, Mario Dussetti's been talking about pensions being taken over and evaporating and being basically gone. And I wanted to share this with you guys. It's absolutely crucial that you guys understand that somebody's going to have to bail out these banks and institutions for basically what they did was, like, this company does basically mortgages that the banks won't do. So if you don't qualify to have a bank, you could go to one of these companies and get your mortgage. But the problem is a lot of the lenders that were dismissed that worked for the company basically were lying with incomes so the TDS would fit. But as an underwriter for these guys, okay, let's say I was an underwriter working for this mortgage lending company. Wouldn't I ask myself, why is this guy taking this mortgage with us for a higher rate when he could be taking it with the bank for less? His TDS fits, his credit is decent. Why is he with us and not the bank? You see what I'm saying? As an underwriter, I think the underwriters have a lot of fault in this because they're not asking the proper questions to the lender. So when the lender submits the application for approval, they're not asking the lender what, this is a good deal. It's a really good deal. You know, the credit's good. His TDS fits, his CGS fits. It's all working. Why is he coming to us with these higher absorbent rates when he can go somewhere else? And this is the problem. Because then why do these people, these pension workers, have to bail out a bunch of faulty loans or a bunch of, you know what I'm saying? Really bad work. You know, you got a construction worker go do a bad job on someone's house, they're going to ask it for it to be redone, right? By that construction worker. Why can't these guys pay out what they've screwed over or fix their problems? Or just go bankrupt and dissolve and let the market go down with it? Because that's what's, you see, Canadian market didn't crash in 2007. The 2007 to 2008, when the U.S. market went down, they bailed it out and kind of saved it. The people in power in the U.S. should have let the markets completely crash. And by today, the U.S. would have been restarted, revamped, and everything would be going good by now today if they let the markets crash in 2007, 2008 in the U.S. But they didn't. They bailed it out, and then now they're running on these Ponzi schemes and kicking the can down the road. That's all they're doing. Unfortunately, they should have just let it crash. But now they're realizing that now, oh, you know what? Maybe we should have let it crash and keep this crap going. But they never did. Anyways, guys, I want to know what you guys think. Comment below. 321,000 retired Ontario healthcare workers are paying for this. I don't know what to say, man. It's getting to a point now. It's like you're taught growing up, or you're taught living your life, how to do things the right way. And then someone comes and does it the wrong way blatantly, and then there's no repercussions or no how do you say there's no one's taking blame. It's okay if we fail, then then people could bail us out. I don't know. There's got to be some sort of balance here, because you're taught from little right and wrong, and then now it's blatantly wrong in your face. I don't know. Comment below, let me know.